Hi everyone, I hope you're all doing wonderful today. I'm the Portfolio Panda, and my job is to try and create transparency in the financial world. Today we are going to look at the topic of bubbles, and not the fun kind that you play with in the garden, the ones with the possibility of financially destroying people. Investment bubbles, also known as speculative bubbles, are market phenomena characterized by the rapid and unsustainable increase in the prices of certain assets. These could be stocks, real estate, or cryptocurrencies, followed by a sudden and steep decline. These bubbles are often fueled by hype, greed, and speculation, rather than by the intrinsic value of the underlying assets, and they can have severe consequences for investors and the broader economy. Investment bubbles are typically driven by a few key factors. First, there is usually a sense of excitement or optimism surrounding a particular asset or market, often fueled by media coverage or rumors. This can lead to a rush of investors buying into the asset, driving up its price. As more people invest, the price continues to rise, creating a self-reinforcing cycle known as a feedback loop. This feedback loop can create a sense of urgency among investors, causing even more people to invest and driving the price even higher. Another factor that can contribute to investment bubbles is the availability of easy credit or leverage. When interest rates are low and credit is abundant, investors may be more willing to take on debt to invest in high-risk assets. This can create a further influx of investors and drive prices even higher. At some point, however, the bubble will inevitably burst. This can happen for a variety of reasons. For example, a sudden change in market conditions, such as a shift in investor sentiment or a change in government policy, can cause investors to panic and start selling their assets. As prices start to fall, the feedback loop that was driving the bubble in the first place goes into reverse, causing even more investors to sell and driving prices even lower. When a bubble bursts, the consequences can be severe. Investors who bought in at the peak of the bubble may lose a significant amount of their investment, and those who bought on credit may be left with large debts they cannot repay. The broader economy can also suffer, as the sudden decline in asset prices can lead to a contraction in credit and a slowdown in economic activity. There have been many examples of investment bubbles throughout history. Perhaps the most famous is the dot-com bubble of the late 1990s, which saw the prices of internet-related stocks rise to dizzying heights before crashing in 2000. Another famous example is the Dutch tulip bubble, also known as tulip mania, was a period of feverish speculation and trading in tulip bulbs in the Netherlands during the 17th century. At the time, tulips were a relatively new and exotic flower that had recently been introduced to the Netherlands. They quickly became popular among the wealthy, and demand for rare and exotic tulip varieties skyrocketed. There is much speculation regarding the truth surrounding this bubble, given that much of what we know about the event comes from Charles Mackay in his 1841 work Extraordinary Popular Delusions and the Madness of Crowds, which you can see was written 200 years after the event. But whether or not the story is true, the message is just as important, and it helps us to look at the situation pretty objectively because we do not have much emotion mixed up in tulip bulbs. If you feel emotional about tulip bulbs, I apologize, but also maybe seek help. One hilarious story to come from this was of a sailor who mistook a rare tulip bulb for an onion and ate it with his herring sandwich and was charged with a felony and thrown in prison. I'm getting off topic, but I just spent the past few minutes laughing at this one. Anyway, this led to a speculative bubble in which the price of tulip bulbs rose to absurd levels. At the height of the bubble, some tulip bulbs were worth more than a house or a year's salary for a skilled worker. However, the bubble eventually burst in 1637 and the price of tulip bulbs plummeted. Many investors were left with worthless bulbs, and the Dutch economy was severely impacted. The tulip bubble is often cited as an early example of an economic bubble, and is still studied by economists and financial analysts today. We spend a lot of time and energy studying bubbles, but we almost always continue to create them. There are many reasons why investment bubbles continue to occur, despite the lessons we've learned from past bubbles. Bubbles often start because of human behavior, such as herd mentality, greed, and fear of missing out. People see others making money and want to get in on the action, even if they don't fully understand the underlying asset or investment. Also, when interest rates are low, investors are more likely to take risks in order to achieve higher returns. This can lead to speculative bubbles in certain assets or investments. Some investors engage in speculation, which involves buying assets or investments with the hope of quickly selling them for a profit. In some cases, bubbles may be fueled by a lack of regulation or oversight. When investors are not required to disclose their holdings or trading activity, it can be easier for bubbles to form and grow. Bubbles can also be fueled by misinformation or hype. Investors may be misled by inaccurate or exaggerated claims about the value of an asset or investment. Cryptocurrency ticks a lot of these boxes when it comes to bubbles. I am torn when it comes to crypto. On one hand, it has the capability of providing a universal currency, and with widespread adoption could change the way we use money forever. And on the other hand, the freedom to create coins means there are too many options to choose from, and we cannot stand together to create a strong unified currency. I won't pretend to completely understand crypto, because I don't. Being able to spot an investment bubble might not stop you from taking part in one, but being aware is the first step. I've enjoyed making this video and having the opportunity to say bubble a lot. If you enjoyed, please subscribe for more bubbly content with my bubbly and emotion-filled voice. As usual, let me know any questions in the comments below and make sure to share this with your least financially savvy friend and tell me if I did okay in explaining the topic. Your most valuable asset is your time. Thank you for sharing yours with me. Until next time.